Did you catch the latest from Jake Claver? Just a few days ago, on November 12th, 2025, he went live in a Q&A session diving deep into XRP and digital assets, calling it the greatest wealth transfer in history, cakes beyond broke. As the CEO of digital asset group Family Office, Jake's been a vocal advocate for XRP's potential. And in this stream, he reiterated his bold takes on how XRP could skyrocket if it secures that Tier 1 asset status from the BIS. He even shocked the community by standing firm on his $18,000 bet that XRP hits $750, potentially netting him $3.5 million if the perfect storm of events align, like ETF approvals, regulatory clarity, and global adoption kicking in. And get this, earlier this week on November 17th, analysts were buzzing about his discouragement of selling XRP, revealing a wealth strategy where holders can generate income without dumping their bags using structured products and lending protocols tied to XRP's ecosystem. Jake's not just hyping, he's backing it with real moves like launching funds at digital wealth partners that let XRP holders earn yield while holding long-term. This ties right into the whispers from the highest levels of global finance, pointing to a shift that could redefine how banks handle their most trusted reserves. And right in the mix is something that's been battle-tested for cross-border efficiency like nothing else. We're talking about a moment where regulatory heavyweights might finally recognize a digital asset as on par with the likes of gold or sovereign bonds, especially with new rules kicking in early next year that could open doors wide. It's got me fired up, because if this plays out, it changes everything for those of us who've been riding the waves in this space. Let's dive into why this could be the catalyst we've been waiting for, connecting the dots between institutional moves, recent market drama, and what it all means for this bigger picture. I've been in this game long enough to see patterns emerge. And right now, with Jake Claver's insights fresh in the air, the signals are aligning in a way that screams opportunity for those paying attention. It's not just about price spikes, it's about systemic integration that could turn XRP into a cornerstone of global finance, especially as Jake predicts six-figure valuations by 2030 if tokenization takes off first off. Thanks for tuning in. Your support keeps this conversation going, and if you're getting value from these breakdowns, hit that like and subscribe to stay in the loop. Seriously, guys, every view and interaction helps amplify these insights to more people in our community. Today, we're unpacking some fresh developments that tie directly into how this asset could elevate its status in the banking world building. On what Jake Claver just highlighted in his latest stream, I've been following the threats from key players like the Bank for International Settlements, and their latest frameworks are setting the stage for select digital assets to potentially join the elite tier of reserves. Think about it. Under Basel III rules, Tier 1 assets are the cream of the crop. Cash, central bank reserves, high-quality government bonds, and even gold got bumped up recently because of its proven liquidity and trust in crisis. These are the buffers banks rely on to absorb shocks. And right now, most cryptos are lumped into a riskier Group 2 category, capped at just 1% of a bank's Tier 1 capital starting January 2026. But here's where it gets interesting. If an asset like XRP gets that Tier 1 nod from the BIS, it wouldn't just be another crypto. It would be treated like core infrastructure for global settlements, boosting adoption and liquidity in ways that could send demand through the roof. And with the new BIS crypto requirements finalized and set to kick in on January 1st, 2026, the timing couldn't be more pivotal. Good Val 07. This isn't some far-off dream. It's grounded in ongoing discussions and pilots that position XRP as a front-runner, just as Jake Claver emphasized in his November 8th broadcast, where he hosted a live Q&A on wealth protection amid these shifts. Beyond our broke. Guys, let's connect the dots on why this isn't just hype. starting with Jake's recent warnings against selling XRP prematurely. He pointed out strategies like using XRP in income-generating funds without liquidating, which aligns perfectly with Ripple's push for real-world utility. Ripple's been building bridges with the BIS for years, joining their Committee on Payments and Market Infrastructure back in 2023, rubbing shoulders with giants like MasterCard and Swift. They've piloted tech for CBDC interoperability, where XRP's on-demand liquidity shines as a neutral bridge between currencies. Remember Project Agora? That's the BIS's public-private collab testing tokenized deposits on a unified platform and reports spotlight XRP alongside XLM for leveling the playing field in cross-border payments. This isn't random. It's about solving real pain points like liquidity mismatches and policy harmonization across 110-plus nations. The BIS has even referenced Ripple's Interledger protocol as key to unifying blockchains, allowing seamless asset exchanges without the usual friction. And with Ripple's team boasting alumni from the U.S. Treasury, Federal Reserve, IMF, and yes, the BIS itself, these connections run deep. It's like they've been architecting this from the inside out. I recall back in my early days tracking these partnerships, thinking how underrated they were. Now with over 300 institutions on board, including Santander and Bank of America, it's clear this is no accident. These aren't superficial tie-ups. There are strategic alignments that could propel XRP into Tier 1 status, especially as the BIS explores ways to integrate digital assets into reserves amid a global debt crisis hovering around $400 trillion. Think about the implications. If XRP gets reclassified, banks could hold it as a high-quality liquid asset, freeing up trillions in trapped liquidity and slashing cross-border costs that currently eat up 1.6% of global GDP. Jake Claver echoed this in his October 22nd prediction, estimating that if 85% of the tokenized market shifts on-chain by 2030, XRP could hit six figures, a scenario that's gaining traction with recent ETF buzz. To really grasp this, let's break down Basel III a bit more. Don't worry, I'll keep it straightforward. Basel III isn't just some bureaucratic jargon. It's the global standard set by the BIS to make banks more resilient after the 2008 crash. It demands that banks maintain high-quality capital to cover risks, and for liquidity, they need assets that can be quickly converted to cash without losing value. Tier 1 assets are the gold standard here, pun intended, because they're ultra-reliable. Gold's inclusion in 2021 was a game-changer, recognizing its role as a safe haven. Now, cryptos like XRP are in Group 2 with high-risk weights that limit exposure, but updates in April 2025 subdivided Group 2 into 2A for more liquid assets like XRP, BTC, and ETH, dropping the risk weight to 600% with volatility add-ons. This is progress, guys. It's the BIS acknowledging that not all cryptos are equal. XRP's edge, its utility in real-world payments with transaction speeds of 3 to 5 seconds and fees under a penny compared to Bitcoin's congestion and high costs. Projects like Mariana and Agora are testing this with SBI Holdings, a major Ripple partner involved, potentially paving the way for XRP's elevation by late 2025. If XRP parallels gold as digital gold with its 24/7 accessibility and scalability up to 65,000 TPS via sidechains, we're looking at an asset that could redefine reserves. Jake Claver's recent live session hammered this home, stressing how XRP's network advantage makes it nearly impossible to ignore for global liquidity, especially with his Instagram reel on November 12th going viral among holders. Now tie that to the recent market turbulence. That brutal drop where XRP got hammered from over $3 to around $125 in a flash. Military tunes. Was it chaos? Now guys, It felt too precise, like a surgical strike during thin liquidity hours right before futures closed. Military tunes, exchanges lagging, maintenance popping up. Coincidence? I don't think so. This screams manipulation to flush out over-leveraged retail while institutions reload at bargain prices. Military tunes. Look at the timing. Right after we see S1 amendments from Bitwise, Franklin Templeton, 21 shares and others for spot XRP ETFs. Canary. Capital even locked in the XRPC ticker and launched on November 13, 2025, posting a record $58 million in day one volume, topping all 2025 ETF debuts. These aren't knee-jerk reactions. They're months in the making, aligning perfectly with the wipeout to reset cost bases low. Military tunes. It's classic Wall Street. Manufacture fear, accumulate quietly, then let utility drive the reprick. And with Bloomberg analysts giving 95% odds for more approvals by November 27, 2025 via SEC review, the institutional wave is crashing in speculations, even bubbling about BlackRock TK jumping in given their past filings and the ETF's strong debut reviving interest. 9 asset managers have filed with estimates of 5 to 7 billion inflows by 2026. This is the reset turning into rocket fuel. Jake Claver connected this directly in his stream, noting how ETFs alone won't push XRP to 1,000 plus, but combined with Tier 1 designation and a supply shock, it's game over for doubters. Zone Meme Central. Here's the significance to our theme. If XRP hits Tier 1, it's not just about price speculation, it's about fundamentals locking in. Fixed supply at 100 billion with burns on every transaction, making it deflationary over time. Escrow mechanisms ensure controlled releases, countering the unlimited minting hypocrisy we see in some projects that preach transparency but hide behind shadows. Let's unpack that. Every XRP transaction burns a tiny fee, reducing supply gradually. Think of it like a self-regulating economy that rewards efficiency. Unlike Bitcoin, where HINGs create artificial scarcity but fees skyrocket during demand, XRP's design keeps things smooth for real use cases. Contrast that with Bitcoin maxes who slam anything non-BTC as a scam. Yet, ignore how XRP's utility in payments crushes their store of value narrative when real-world adoption hits guys. Think about the hypocrisy. They critique centralization while their network chokes on fees during peaks. XRP ISO 20022 compliant, seamless with banking networks, and already powering corridors in the Middle East and Latin America. This positions it ahead of the curve for institutional buy-in, especially with swell events featuring heavyweights like BlackRock and White House reps. I remember chatting with some insiders at a conference a couple years back. They were buzzing about how XRP's compliance with standards like ISO 2022, which rolls out fully by November 22, 2025, makes it the perfect bridge for tokenized assets and CBDCs a Ripple supply. It's not hype, it's happening. With XRP's liquidity pitch tying directly into Basel III needs holding steady near $2.55 amid the range at Ripple XRP. Jake Claver's strategy of living off XRP without selling via options, staking, or funds adds another layer, showing how Tier 1 could make XRP a passive income machine for holders. Let's zoom out with an analogy. Market volatility is like background static in a concert hall. Lots of noise from short-term chaos, FUD, and maxis spreading misinformation about endless dumps or no utility. But the big catalysts, they're the thunderclap that silences everything, like BIS elevating XRP to Tier 1, signaling trust and broader usage. Historical parallels. Look back to 2013 to 2017 cycles, turbulence before booms, where rebounds crushed doubters. Those were the days of wild swings, but each dip set up massive legs up as adoption grew. Recent on-chain data shows V-shaped recoveries after wipes, with deep pocket accumulation pulling prices back up. fast at military tunes. After that crash, XRP snapped back to $220 to $30 like a magnet. Not retail panic reversing, but smart money seizing the dip. Military tunes. And with ETF inflows projected at 5 to 7 billion by 2026, we're talking massive price appreciation. Dig deeper into history. In 2020, amid the SEC lawsuit, XRP got crushed. But that flush led to clarity and a rebound. Same pattern now. Liquidations purge leverage, open interest resets, and institutions like Evernorth. $1 billion Treasury allocations at Levy Riedfeld. It's the calm before the storm where volatility compresses, and then boom, ignition from utility demand. Jake Claver's $1 million bet decline with Levi Riedfeld on November 8th sparked debates, but he clarified that macro events like government shutdowns ending and the Clarity Act could trigger the supply shock he's betting on. Levy Riedfeld critiquing the noise. So much FUD out there, from Max's blind to XRP's regulatory wins and transparency contrasts. They hype secretive projects while ignoring how XRP's fixed supply and burns create scarcity without the drama. Guys, here's where it gets really interesting. I wasn't expecting the Senate A Committee's bipartisan crypto bill to drop right amid this buzz, pushing for clearer market structures. It counters the setbacks, turning short-term pain into long-term gains. Institutional adoptions ramping. MasterCard testing RLUSD on XRPL. Wallet records exploding at unknown DLT. This isn't about chasing pumps. It's reassurance that fundamentals like utility and payments and escrow mechanics position us for the inevitable boom. Take the Maxis blind spots. They rail against banker coins but miss how XRP's partnerships with Tier 1 banks like Santander and SBI are because it's poised for Tier 1 classification alongside gold and military tunes. Hypocrisy at its finest. Bitcoin's energy-guzzling proof of work gets a pass, but XRP's eco-friendly consensus is centralized. Nah, it's efficient, handling billions in volume without the bottlenecks. And with 1,700 NDAs from the SEC trial hinting at hidden deals, the reveal could be massive. Jake Claver addressed this in his November 11th reply, agreeing with analyses but tweaking the math for XRP's path to 4 or 5 digits, showing his nuanced view beyond just BTC comparisons at Beyond Broke. On the price side, speculation's heating up. Analysts eye 15KN to $20 pre-bill passage, with TD buy signals hinting at weekend rebounds despite bears. We've seen extreme fear hit 10 on the index, a rare buy signal that's historically lucrative. Bullish RSI divergences on lower timeframes scream reversal, with liquidity heat maps showing squeezes ahead. But zoom out. Monthly Mackie teeters on a bear cross, echoing 2018 and 2022 drops. So if November doesn't flip it, caution's key. Yet death crosses often bottom signals. Bullish in disguise. Smart money's betting on utility-triggered demand, not FOMO. With XRP surging post-ETF filings, some see $3 within reach, and technical breakouts signaling 5 parad targets. It's not blind optimism. On-chain metrics show accumulation, and with Ripple's 500-man raise pushing valuation to 40B, validation's everywhere. Let's think psychologically. Fear sells, but data buys. When extremes hit like that fear index at 10, it's when bounces happen. History shows lucrative opportunities from 2020 lows. Don't get shaken. See it as preparation for the leg up. Jake Claver's 100K prediction by 2030, shared just 3 days ago, adds fuel, tying into timelines where XRP could run to $700, $1,000 based on fractal patents and adoption waves. Global perspectives add depth. Kazakhstan eyeing crypto reserves. BIS backing XRP as a cross-burr giant. 25 hours await psychological insights. Panic sells feed institutional buys. Turn despair to excitement by seeing the reset as preparation. Ex-military tunes address pain points. Misinformation clouds judgment, but evidence like Ripple's 500 meta raise and 40B valuation screams validation. This empowers our community, fostering trust through education. From Asia's SBI to Europe's Standard Chartered, XRP's corridors are global. And with 130 countries piloting CBDCs using Ripple tech, it's a worldwide play. Psychologically, we're wired to fear dips, but smart money sees them as entries. Retail reacts, institutions orchestrate. Turn that despair into hype by focusing on the architecture. Tokenized settlements via DTCC, Visa's blockchain layers, all converging on XRP as the bridge is military tunes. It's emotional relief for holders in uncertain times, knowing the foundation's solid as Jake Claver's recent posts remind us that XRP's timing makes it nearly impossible to ignore. Wrapping on a visionary note, this transformation's inevitable, guys. XRP is poised to bridge the old world to the new, turning uncertainty into opportunity. The excitement's palpable. Share your thoughts below and let's build this together. Stay hyped, stay informed. We're just getting started. Imagine a future where cross-border payments are instant, costs negligible, and XRP sits alongside gold in reserves. That's the vision, and with all these dots connecting, including Jake Claver's bold calls, it's closer than ever. Thanks for hanging out.